Hello, time now to move to the market report, as we do every time this time of the day. With me, David Williams. A rather different one, though. We're going to be looking at how the markets and the rating agencies might respond or have responded to one of the toughest medium-term budget policy statements since they were started some 17 years ago. Delivered, of course, today by the Finance Minister, Pravin Gordhan. Well, joining me today is Dr. Adrian Saville, who's the Chief Strategist at Citadel, and Rowan Williams, Director at Nitrogen Fund Managers. Evening to you, gentlemen. I think I'd give you each an opportunity for a big picture response. And when Pravin Gordhan was Finance Minister before, and Trevor Manuel before him, we became accustomed to these highly sophisticated, very clever, very fluent balancing acts where the money had to be allocated and trade-offs had to be made and you had to think about the poor and growth, and they seemed to do it so well financially. Today, he had a massive political balancing act as well. I mean, there were 2 weeks ago people thought, well, maybe he won't be delivering this budget. So Adrian, kick it off. Another masterful performance by the Minister.
I think you've captured it beautifully. Historically, very much a balancing act, and this afternoon, perhaps more of a juggling act. And I think he's done it very elegantly. Pravin Gordhan has fantastic experience. He's got established gravity, and I think he demonstrated that this afternoon. And there's lots of evidence of him talking to different parts, perhaps we could be bold and say different factions, with references throughout the statement to this department, this minister. Almost no one was left unmentioned.
Like a prize giving. You don't want anyone to feel left out.
No one was a loser here.
Yeah. Right?
Yeah, I think he's trying to do the best with the hand that he's dealt. I mean, clearly, in terms of the actual facts and figures and the current circumstances, he's on the back foot. If we look at the facts, they were overall negative. Missing revenue, missing the budget deficit, spending targets, and really having to jiggle things around, I guess, to try satisfy students who are asking for more money, which they look to deliver on. And then also, obviously, the rating agencies and placate them, but then also a little bit of pro-growth. So it was quite stretched, I felt, in terms of the various areas. One of the areas they had to give was raising taxes, not much detail there. So I think we're getting to a very difficult economic environment. It's shown up in the figures, so he made the best with what he had.
Well, we'll talk about how much was style and how much was substance, and if there was anything radical or bold even that we can take comfort from going forward, or at least argue about. Let's have a look, though, at what the markets locally have been doing and see if we can discern any reaction there by investors and the people who allocate capital to that medium-term budget policy statement today. So let's start with the JSE All-Share Index. Well, it's on me rather than on the JSE, and I'm not sure if you saw where the JSE finished today.
I would venture that the JSE is probably not the most obvious place to go, because it really is it's a mixed board.
Yeah, and most of the companies on it are not exposed to the kinds of things we're talking about. But 0.38% down, I mean, that's not a dramatic move. Let's just look at those sectors there. We've got the banks and the financials up. Resources and industrial. It looks like a normal day on the JSE, those kinds of mixed performances. Gold price down by 0.5%, platinum price by 0.17. Both of those have been under pressure. Now the currency is the one I think that we really need to talk about. 1388 is where it's at. Well, it doesn't look dramatically stronger, but equally importantly, it doesn't look dramatically weaker. So it's round about 1389, way off the 14 level, a shift of about 1% today. So let's talk about that, Adrian, and the currency.
Well, the currency did respond negatively, but it was very, very marginal. In the greater scheme of things, I think it would be bold to say that this was because of the budget. You know, this type of move is well within realms of possibility for the rand on any given day. The bond market popped a tiny bit, 10 basis points. And going back to the JSE, the sector that I think you want to watch most closely for a response is property, because property is sensitive to economic growth and the cost of funding. And in both scores, the news was negative. And so the property struggled.
Yeah.
Yeah, I guess the other sector is also the banks that's exposed to the broader economy, and they actually strengthened a bit, notwithstanding the movement in the bond market, which seemed a bit curious. I think this was an important milestone because in and of itself it was important, the numbers, but obviously what it means for a potential rating downgrade. It seems that in terms of the market interpretation, it's sort of even. I don't think it makes it more or less probable. From my perspective, the numbers were slightly negative relative to the forecast given in the February budget. But a lot of that was known, I guess, and it will be known by the rating agencies already. So it seems fairly steady, and so maybe a little bit optimistic about the outlook for that ratings downgrade,
So
and hence the
banks
reaction.
could actually be saying, the bank response today could actually be saying, not yet.
That would be my interpretation.
But yes, it's going to happen. You're saying not yet, but it will happen. Is that what they're saying?
Aren't we going to talk about that later?
Yeah. Let's just come back to the picture that we've had here. And a lot of what you're saying, so the rand moved, but not by much. The JSE, as we said, is not likely to move. Property, some response there.
I think that's trying to read through. The rand market, the bond market, no drama.
Yeah. So does this mean what we've had here is a holding operation? He can't do very much that's different. He's packaged it as best he can, tried to sound inclusive, statesmanlike and all that. But actually, has anything happened that's different, right?
I think relative to expectation, not really. And at this point, that's obviously where markets move against expectation. We knew growth was low. We knew their 0.9% forecast for the year was optimistic.
He said 0.5 for this year
Exactly, yeah. So revised it downwards. I think what was positive was on the expenditure side. They have agreed reining that back, and fairly strong language that the individual departments have to look at their manpower and reducing that initially through attrition and indicating that may not be enough. So I think that was positive. So in a sense, he was balancing the books, having to find money, collecting a bit from increased taxation, but also reduced expenditure to balance the books. So that I think was positive, but no major new news, as Adrian's saying. It didn't really move the needle.
And all of these things take time, of course. So even if you want to take a radical decision, it takes time to filter into the system. Money that you want to move is already committed for a certain time. Time to take a short break now on the Market Report. We'll be back with Adrian Saville, Chief Strategist at Citadel, and Rowan Williams of Nitrogen Fund Managers. This evening with me, David Williams. Special edition looking at the talking points coming out of the medium-term budget policy statement delivered by South Africa's Finance Minister Pravin Gordhan this afternoon. With me in the studio, Adrian Saville, Chief Strategist at Citadel, Rowan Williams, Director at Nitrogen Fund Managers, and we also have Gardner Rusike, who is from S&P, and you are the South African representative, can we put it that way? You're the man who decides.
No, not at
Recommends.
all. Not at all. Okay.
Are you going to recommend a downgrade?
We don't operate like that. So I'm an analyst at S&P covering South Africa sovereign rating along with another analyst. So we are a team. We look at the file and we assess, and we take the file to committee. We discuss and take the recommendations through the discussions.
All right. So your analysis of today.
Our analysis of today, I think the starting point is the issue around growth. First, there is a revision on growth numbers, I think, which we expected because Treasury's forecast were still a bit on the high side. So the downward revisions of the growth forecast today have got implications on the fiscal framework. So on the fiscal framework, we are seeing a larger revenue gap. Right, but the larger revenue gap has probably been mitigated a little bit by the expenditure adjustment. So we have a smaller deterioration on the fiscal path. But I think it's broadly consistent with the February budget. So the deteriorations within are minor, not significant enough to cause a lot of changes in the view for the fiscal position.
Okay.
Yeah.
We were just saying with the rand not moving that much, it's steady as she goes, holding operation. Right?
It's I guess that's the next big financial indicator. Obviously, we've got some political noise to get through before the rating agencies preside and make decisions in early December. And I think the markets are going to be quite tenuous and looking at these things. What we have seen is quite a lot of emerging market currency strength. So the rand has been buoyed by that as well. If you look at the ruble, the real, they've appreciated significantly. I think if things turn out positively, the rand has got quite a lot of upside from these levels.
Adrian, if we didn't have the Fees Must Fall campaign with this enormous pressure to find billions of rand somewhere, maybe this whole budget would not be controversial. I think the controversy here is you've got to find money for higher education, not only universities, but further education, training colleges. So even if you find wasted money from elsewhere, it's not enough.
Look, South Africa is trapped in many regards in this low growth scenario. And although we're talking about 0% economic growth, this is a per capita recession. We've got 1.7 population growth and 0 economic growth. That's minus 1.7 per person. I think the ratings agencies place weight on per capita income growth, and we're a long way off the required sort of 2 to 3% on to translate into positive per capita. By just about every account, I think this is rearranging the furniture. I don't want to point to a sinking Titanic. I think that would be overstating the case spectacularly. But this is rearranging the furniture. There are definitely places to go to be able to improve efficiencies and establish cost savings. I would say that the big thing that was said and the big thing that wasn't said, the big thing that was said was that the Minister of Finance read the read the policy statement. Yeah. So there was a degree of continuity, certainty. It took some uncertainty out of the equation. We face a 2nd of November event. We face a 2nd of December event. To me, the big unsaid in the statement was almost no reference to the state-owned enterprises. And this is the elephant in the room.
I see you nodding.
Yeah, so let's put it this way. So as far as the fiscal numbers are concerned, they're probably within the best case of our expectations. What we probably wanted to see more was sort of a progress report on the economic reforms that government has outlined that they want to do.
Because that was the undertaking in February.
Yeah. Exactly. So it's the economic reforms, it's the SOE reforms. So I think the detail in that was probably lacking, maybe perhaps because this is a fiscal plan and it's limited to the fiscal. So maybe it's about the other economic cluster departments that focus more directly on some of these issues. But I think it would have been of more benefit to us to see that. But I think we have an engagement going ahead with the government and we'll tackle those issues.
I mean, David, you mentioned earlier political sort of juggling act to some extent. I think there was a fair amount of allusion to some of these projects. You sort of talked around major projects. People were expecting something about the nuclear deal, but saying we don't have enough available with even our current resources, and if we remain in this low growth scenario below 2%, we're going to have to look at cutting some of the policies, the government policies. So I think he was alluding to some of those expenditure projects that are not really feasible in the current environment.
Gardner, it's come back to you. We want growth. So and where you're going to find money, well, maybe you have to tax more, whether it's corporates or individuals. If you do that, you're less likely to have growth. You're going in that circle and you keep getting pushed back.
Yeah.
That must be an equation that you focus a lot on.
Yeah, absolutely. I think if you read the statement as well, I think the Treasury was probably at pains to try and explain that they need to take some revenue measures, which may not necessarily stifle growth. But I think if we take a step back, there are more policy measures that need to be done in order to enhance growth. So there are a lot of structural rigidities, structural constraints that the government need to address. And when you get growth, it's easier then to start to getting your tax revenue going because the economy is functioning. So what we have now is pressures on the VAT, pressure on the personal income taxes because the economy is not growing. But doing the right things in the domestic economy, reducing the constraints, can help the tax measures.
But there's a vicious circle here, Adrian, which could become a virtuous circle, and that is that political uncertainty is bedeviling confidence, policy issues, the faction fighting in the ANC. So if you kind of sort the political noise out, not just the noise, but the reality, then that starts unlocking other opportunities.
I think there's two important components in that observation. The one being the role that certainty plays. And there's no such thing as a guaranteed outcome, but there's certainly sort of clear rules of the game. And those have been, I think, compromised in the recent past. The second is there is reference in the medium-term statement to the infrastructure spend, and in particular energy, water, transport, telecommunications. These are powerful multipliers. They are productive assets that can bring important spillover and productive contribution to the economy. The growth that is forecast in the spending numbers, so it's not just that they spend, it's that the spending needs to also be effective. But that, I think, is a potentially powerful and unsung hero. The second is outside of our control, but I would venture that the higher commodity prices that have been given to us from the external environment in 2016 actually point to better economic growth in 17 than is sort of on the table. So I would venture that perhaps we could be in for even a better than 2% year.
Sounds like there's perhaps not a huge wave, but a reasonable wave coming internationally. We need to ride it, though. We need to be able to get on the board.
Absolutely, yeah. We have to make sure we have the productive capacity, the productive assets, the conducive environment in order to achieve that. What was good to see in terms of the tax collections is actually mines produced better than expected and a higher tax revenue. So maybe that's starting to come through. What we did see also was that the Treasury indicated that consistently their expectations about future growth have been not met. They've been disappointing. They forecast next year's going to be better, and then the following year's, and they keep lowering that and lowering that. And that is quite a concern that we seem to be running out of time in terms of getting into this growth situation, which I think will lead to a better life for all in South Africa.
Gardner, there was a kind of theatricality almost about the minister talking. At one point he referred to legal issues, which was about himself, of course, in a typically understated way. But he said we're at a crossroads politically and economically. And maybe that's the first time that this has been stated like that, where both are uncertain.
Yeah.
And how do you see this playing out?
Yeah, I think we highlighted these challenges in our June report. That I think there are two ways, the politics challenges and also the economic challenges. So in order to address the economic challenges, you also don't need to create the political challenges. So the political dynamics that are playing out is something that was self-created. So 12 months ago, 18 months ago, when we write our reports, there wasn't so much on the political dynamics, but it's something that has been created in the last few months. So it is important that at least at the government level, that the government pulls in the same direction, that we can start to believe that the things that the government says they want to do, that they can actually do them. So if a lot of energies are spent on the political contestation and government agencies fighting, especially in the public domain, it reduces the trust, the belief, the benefit of doubt that you can provide that actually economic growth can come back to be higher, at least for the medium term, that could support the kind of credit metrics that we look at.
Yeah. Adrian? Looking at the political economic matrix, what needs to happen? Is it that President Zuma must cease to be the president? The unprecedented business commentary now on the political space by those 80 executives who signed saying the charging is ridiculous, we're against this. I mean, this can't just stay in limbo now. This has to develop in a direction.
Yeah, David, I would say be careful what you wish for. I think it would be dangerous to make any sort of pronouncements on the political landscape. So rather let me be vague and say what the economy needs, what markets need, what investors need are clear rules to the game. And they need resolution on the issues of state capture. They need to Pravin Gordhan will have his day in court on the 2nd of November, but that needs to be resolved and put in the past. So there is I would say that there is a desperate and urgent need for the certainty. With that in place, South Africa has it well within the realms of possibility to achieve fairly elevated and fairly sustained growth, starting with redressing the infrastructural spend deficit. And put those two things in place, I think we are comfortably back in the world of a 3% growth landscape.
Right, just to wrap up quickly, first you, Rowan, and then I'll give you the last word, Gardner.
Yeah, so I think the optimist in me says that in terms of this statement, there was enough done to sort of contain the current situation. Come 2nd of November, and from our perspective, traders' perspective, you're saying the price action shows that the market is reasonably confident that the political issues are being dealt with, are not going to get out of control. We could, in the short term, have a bit of stability in the lead up to ratings, and it could be a positive outcome, and I think then we'll be on more positive footing to take this country forward and address the issues that need to be really addressed.
Gardner?
I think what we normally say is politics affect policy choices and policy choices affect outcomes. So it is important to keep these risks in check so that they don't escalate and they don't break some of the social contracts that government has built with business and labor.
There we have clarity from all three of our guests. Clarity here in the studio at least, perhaps not out there. That's all for the Market Report Mini Budget Wrap. And thanks to my guest Gardner Rusike, S&P SA Sovereign Analyst. Adrian Saville is Chief Strategist at Citadel, and Rowan Williams is Director at Nitrogen Fund Managers.